Welcome back to FutureAlpha. I trade full-time and I also build my own quantitative research system. Today happened to be a good day. The account had a decent, unrealized gain, but days like this do not happen every day. There are losing days too. So today I am not here to talk about the market. I will talk about the tools, what hardware I use to run models, what software I use to watch the market, and what the whole setup looks like. Let us start with the hardware. This small gold box is NVIDIA DGX Spark. I use it to run local models. It is palm-sized, about 1.2 kilograms, but inside it is a GB10 Blackwell chip, the same generation architecture NVIDIA uses in the data center. It has a 20-core ARM CPU, a Blackwell GPU, and up to 1,000 TOPS of AI inference performance. 10 years ago, this kind of compute would have needed a machine room. Now it sits on our desk. The part I care about most is the 128 gigabytes of unified memory. The CPU and GPU share the same memory pool, so data does not have to move back and forth. NVIDIA says it can support fine-tuning 70 billion parameter models and inference on 200 billion parameter models. In practice, large models usually run in 4-bit quantized form, and the speed is still very usable. It costs about $700 upfront. What I am buying is local control, privacy, and a machine I can use whenever I want. One command can pull a quantized Llama 70B model. A 70B model runs fully local, with no cloud API, and the experience is smooth enough. Besides large language models, I also use this machine to train my own Quant models. I will not show the actual features or strategy logic, but the benefit is clear. Training and inference both stay local, and model weights do not have to be uploaded anywhere. If you trade seriously, you understand this. Strategy-related work should stay private whenever possible. That is the hardware side. Now let us talk about the software. I built a quantitative research platform called FutureAlpha. It is not a trading app. It is an analysis tool. It helps me read market structure. The actual decision to buy or sell is still mine. Let me walk through it quickly. This is the decision center. It is the first page I check before the market opens. It lists the key events that could affect the market today, which companies are reporting earnings, whether there is macro data, and what should be watched first. It saves me from digging through calendars manually. This section is the market overview. The system looks across hundreds of stocks and classifies the current structure of each name. Weekly structure is on one side, daily structure on the other. At a glance, I can see whether the market is broadly bullish or bearish, how many names are moving up, and how many are still grinding near the bottom. The lower section is dual time frame alignment. When the weekly and daily views point in the same direction, the signal tends to be more reliable. For example, SBY and QQQ can both show bullish structure across 2 time frames. This is not prediction. It is a description of the current state. This is the A-grade scan. It filters hundreds of stocks and surfaces the highest rated setups, both long and short. Each result includes a stop level and a structural explanation. The point is not which ticker is on the screen. The point is how the system works, rating, key level, and what condition would invalidate the setup. None of this is trading advice. I look at it, but whether to act and how to act still depends on many other factors. This view is the trend channel. The upper chart shows trend direction. The yellow band is the envelope of fast and slow-moving averages. When the band expands, the trend is moving. When it narrows, the market is consolidating. The green line is a long-term support line. Price above it suggests a bullish structure. Price below it suggests a bearish structure. The lower chart looks at position cost distribution. Green means holders are in profit, red means holders are trapped. The key is the crossover. When the purple line crosses above the cyan line, the market may be shifting from trapped holders to profitable holders, which often corresponds to bottom confirmation. The reverse can be a top warning. The upper chart shows direction. The lower chart shows participant psychology. When both confirm, the signal is stronger. This chart looks at momentum and buyer versus seller pressure. The candles have 4 colors. Deep green means strong upside movement. Light pink means price is still rising but losing speed. Blue means energy is building. Deep red means strong downside movement. You do not have to guess the state of the candle, the color tells you. The 4 lines in the middle are adaptive trend lines. When they are stacked upward, the trend is up. When the order reverses, the trend is down. When the 4 lines compress and tangle together, a regime shift may be coming. The histogram at the bottom shows daily buying and selling pressure. Green means buyers dominate. Red means sellers dominate. Bar height reflects volume, and the green-red mix shows who controlled that day. I read these 3 layers together: candles for the current state, trend lines for direction, and volume pressure for capital flow. This indicator is designed to identify possible turning points. The red, blue, and green lines form a price channel and define a mean reversion zone. Price near the upper band is more vulnerable to a pullback. Price near the lower band is more likely to bounce. The numbers on the chart are counters. They track how many consecutive days price has moved in one direction. When the count reaches 9, the system marks a signal, meaning momentum in that direction may be running out. If it continues to 13, that is an even stronger exhaustion signal. N and U are short-term extreme markers. N means price is stretched to the upside and has broken recent highs, so I watch for a pullback. U means price is stretched to the downside and has broken recent lows, so I watch for a bounce. Yellow candles mean price has entered an extreme zone. In simple terms, the numbers tell me how much momentum may be left. N and U tell me whether price has gone too far, and the channel tells me where the reasonable range is. To summarize the system, it is quantitative, automated, and local first. The platform gives me a structured view before I make decisions, so I am less likely to improvise emotionally during live trading. I still watch news and macro conditions, but they do not replace the rules. The core computation runs locally, including on the Spark. This is what an ordinary working day looks like in this workflow. The platform is currently open for testing and free to use. The link and invitation code are in the description. I built this for myself first, and now I am opening it up for people who want to try it. It does not tell you what to buy or sell. It helps you understand the current market state. What you do with that information is your own decision. I trade alone. There is no team and no fund behind this channel. The channel is simply a record of the process. One final reminder. This video is only a demonstration of tools and workflow. It is not investment advice, and one good day of performance does not prove anything. Thanks for watching. I will see you in the next one.